Okay, um, so let's just continue with our discussion. But first, let's have a pop quiz. Okay, so again, when you answer, you just type in your answers in the chat box, or you can open your mic and then just tell the entire class your answer. You can try as many as you can or you want. All right, so let's do it. For one, unconditional promise to give are recognized as contribution revenue when A. The promise is received, B. The related receivables is collected, C. The time or purpose restriction is satisfied, or D. The future event that binds the promisor occurs.
Yes, sir. Nag-present ka sa screen, sir.
Okay, let me see. You can't see my screen?
Yes, sir. Wala. Banana, sir.
Okay. Okay. So when do you recognize it as a contribution, unconditional promise? Okay, the promise is received. Okay, that's correct. Letter A. So all of you answered A. That's good. Next. Net assets that are restricted by the governing board of a non-government, not-for-profit organization are reported as part of. Okay, good. So net assets that are restricted by the governing board of a non-government, not-for-profit organization are reported as part of unrestricted net assets. Okay. Next. Which of the following is not a characteristic of a conditional promise to give? Not a characteristic. Okay, so that a characteristic. So depends on the occurrence of a specified feature and uncertain event to bind the promisor. So it's a condition. Gift may have to be returned to donor if condition is not met. That's also a condition. Recognized as contribution revenue when the conditions are substantially met. So that's part of the condition. So depends on demand by the promise of for performance. So it's not okay. So it's not a characteristic of a conditional promise to give. So letter D is the correct answer. You're all good. Okay. Next. Unconditional promises to give that are collectible within 1 year of the financial statement date. A should be reported at their gross amount. B should be reported at the gross amount less than allowance for uncollectible accounts. C should be reported at the present value of the amounts expected to be collected using the donor's incremental borrowing rate. Or D should not be reported until collected. What do you think? Okay. So a lot of you or most of you answered B, and that's correct. Okay. Okay. So should be reported at the gross amount less than an allowance for uncollectible accounts. Next, revenue of a hospital from grants specified by the donor for research would normally be included in. Where do you include that? Other non-operating, other operating, patient service, or ancillary service? Okay, so it's also B, other operating revenue. It's other operating revenue. Next, for the summer session of 2021, Silliman University assessed its student 1,700,000 net of free funds, covering tuition and fees for educational and general purposes. However, only 1.5 million was expected to be realized because scholarships totaling 150,000 were granted to students and tuition remissions of 50,000 pesos were allowed to faculty members, children attending Silliman. What amount should Silliman include in the unrestricted revenues from student tuition and fees? Okay, so revenues include the tuition assessed less any refunds or 1.7 million. Okay, so answer is 1.7 million. How about this one? University of Santo Tomas, unrestricted current funds comprise the following: assets 5 million, liabilities 3 million. The fund balance of net assets of University of Santo Tomas when unrestricted set net assets was there is including deferred revenues of 100,000. Okay, so it's 2 million. See, deferred revenues are considered liabilities and are properly included. So that's 3 million. So deduct the 3 million from the 5 million, you'll get the 2 million. Good, good. Next, the following information was available from St. Louis University's accounting records for its current funds for the year ended March 31, 2021. Restricted gifts received and then unrestricted gifts received. What amount should be included in current funds revenues for the year ended March 31, 2020? Okay, so the answer is 775,000, correct. So thank you. Answer is 775,000. How do you compute that? Restricted gifts received extended 100,000. Unrestricted gifts received extended 600,000. Plus unrestricted gifts received not expended of 75,000. So 775,000 is the correct answer. Good, good. About this one, last item. In 2020, the Board of Trustees of Ayala Foundation designated 100,000 from its current funds for college scholarships. Also in 2020, the foundation received a bequest of 200,000 from an estate of a benefactor who specified that the bequest was to be used for hiring teachers to tutor handicapped students. What amount should be accounted for as current restricted funds? Okay. Okay, so yes, the amount should be accounted for as current restricted funds is 200,000. Funds are considered to be restricted funds only when they are restricted by donors or others as to the specific purposes for which the funds are to be used. This would be the case for the 200,000 pesos bequest. When funds are designated for a specific purpose by the Board of Trustees or some other internal body are considered unrestricted funds. Like the theory part earlier, okay? So the designation of the Board of Trustees for the 100,000 for current funds for college scholarships is not a restriction. Okay. At least not, it will not make it restricted. Okay. So you're right, that's correct. So let's do this for accounting for colleges and universities. So accounting for colleges and universities are required to use fund accounting due to the large amount of restricted resources under their control. So accrual accounting is used, but there are certain similarities to accounting by governmental funds, especially in the reporting of expenditures rather than expenses. Okay, reporting of expenditures. Okay. So, what are the types of funds for colleges and universities? Do you still know what are the types of funds? Agency funds. Plant funds, scholarship funds. Okay, so the types of funds would be the current fund, loan funds. You have their agency funds, endowment and similar funds, annuity and life income funds, plant funds. So good, good. Okay, so what is a current funds? Account for resources for the institution that will be used in carrying out the primary objectives, instruction, research, extension, and public service. So this is there's unrestricted current funds that are not subject to outside restraints on usage, and there are also those that we say restricted current funds that have been restricted by donors or grantors to specific purposes. Okay, as in the case of hospitals, resources designated by the Board of Trustees are still considered unrestricted since they lack externally imposed restrictions. Okay, so about loan funds, what can you or can anyone describe to me what loan funds are? Okay, thank you, Princess. So these are established for resources that are to be loaned to students, not just students, but also to faculty or staff. The loan fund is not for loans, notes, or bonds payable to others. It is designated to hold assets, not liabilities. So fund balances should be separately reported. Okay, should separately report restricted and unrestricted amount. Restricted amounts represent resources which are outside parties provided to the university on condition it will be used for loans, and unrestricted fund balances represent the resources which were placed in the loan fund at the election of the university itself. Okay. How about endowment and similar funds? What do you remember, or what can you tell me about endowment and similar funds? Anyone? Is any idea what are endowment and other similar funds? Mm-hmm. Thank you, Andrea. How about the others? The term is temporarily restricted. Principal amount must be kept intact. Okay, so thank you for that, Princess Niven J. So endowment funds are resources which are outside parties contributed to the university on condition they not be spent but invested to yield earnings which may be spent. Okay. Ano daw? They are intended. They are actually funds coming from outside of the university. They are contributions from outside of the university. So that's what Niven is saying. Their principal amount must be kept intact because the condition is that they not be spent but invested, and whatever is the yield or earnings is the amount that can be spent. Okay, so the term endowment funds may be spent after a specific. We have term endowment funds which can be spent after a specific period of time has passed or a certain event has occurred, while quasi-endowment funds aren't actually restricted but have been designated by the board of the university to be retained and invested. So occasionally, a donor will establish an endowment fund but place the funds with an independent trustee who will remit earnings to the university on a regular basis. Since the fund principal is not under the control of the university, it will not account for it, but simply note the arrangement by memorandum and in the notes to the financial statements. Okay, because again, your right is only limited to what is the yield. Okay, so and it's especially if it's not under the control. So that's an endowment fund. So mostly if it's an endowment, you cannot spend the principal amount of the endowment. You have to invest it. Only the yield or the earnings can be spent. Okay. How about annuity and life income funds? What do you know about it? Okay, so annuity. Thank you, Princess. Shall pay specified fixed amount to a designated beneficiary. Okay, how about the others? What can you remember about annuity and life income funds? Resources given to the university on condition. Okay, so annuity and life income funds are resources given to the university on condition that regular payments may be made to a specific person for a certain period of time, after which all principal is available to the institution. Okay, so life income funds require distribution of all earnings to a specified person, upon whose death the balance becomes expendable by the university. So dito, hintayin mo muna mamatay siya, no? Para ma-spend mo siya unrestricted, di ba? Na pag-spend ng money. Okay? So, that's annuity and life income funds. How about plant funds? What can you remember or what can you tell me about plant funds? Okay, so thank you, Hans, Rona, Rysel, Mary Jean, Cristania. So funds are the acquisition of plant assets used for construction, acquisition, maintenance, renovation. Okay, investment in plant assets. Okay, so plant funds, you're right, no? All of the assets and liabilities are associated with fixed assets of a university are accounted for in the plant fund. So the plant fund balances include unexpended plant funds, funds for renewals and replacements, funds for retirement of indebtedness, and investment in plant. So unexpended plant funds contain liquid assets which are to be used to acquire new plant assets in the future. So, right. Funds for renewals and replacements contain liquid assets which are to be used to replace existing plant assets as needed. Parang naghihintay na lang yan na masira or na mag-give up na yung machines and then they'll use these funds to actually replace that. Funds for retirement of indebtedness contain resources to be used to make principal and interest payments on debts incurred to acquire plant assets. So investment in plant consists of the fixed assets themselves and any long-term debt issued in connection with acquisitions of these assets. The fund balances of the first three funds should be subdivided further into restricted and unrestricted balances based on whether classification in the plant fund is the result of external requirements or internal designation. The investment in plant fund balance is subdivided. Okay. Okay, so let's do the agency funds. So agency funds are resources received by the institution which belong to others such as student body fees, okay, are held in agency funds with a liability equal to the assets collected. There is never any fund balance in agency funds since all assets are held are owed to others. Revenues include tuition and fees, government appropriations, government grants and contracts, private gifts, grants and contracts, endowment income, sales and services for educational activities. Okay, all these things, okay, will be under revenues. And expenditures will include educational and general expenditures, auxiliary enterprises, hospitals, and independent operations. Okay, so that's it for colleges and universities. Any question? Okay, let's go to accounting for voluntary health and welfare organization and other not-for-profit organization, VHWO. Okay. What are the funds used by the voluntary health and welfare organizations and other not-for-profit organizations? What do you know? Can you tell me, guys? Funds. I'm looking for the funds. Okay, endowment fund, unrestricted fund. What else? Okay. So, funds used by VHWO are current fund and restricted, current fund restricted, land building and equipment fund, endowment fund, and custodian fund. Okay. So, what can you tell me about the current fund? Okay, current fund is unrestricted fund used for operations. Okay, include unrestricted contributions, restricted fund that have been expended, authorized fund available for immediate use. Okay, so this fund is used for operations that require only the discretion of the organization's board of directors and include assets designated by the board for specific purposes. Okay, so revenues are recorded using the full accrual basis. A distinction should be made between public support and revenues. Okay, so public support, it is the inflow of resources from voluntary donors. Okay, no direct personal benefit from the organization's usual programs in exchange for their contributions. Kasi nga donation siya from the donors, no? Includes contributions, special event support, legacy and bequests, and proceeds from fundraisers. Whereas revenues are inflows of resources resulting from a charge for service from financial activities or from other exchange transactions. It includes membership dues, program service fees, sales of publication, and supplies for proceeds from sales of these items, investment income, example, interest, dividends, and other earnings. So, dun sa public support, wala kang kailangan gawin. Tatanggapin mo lang yun as the VHWO. However, sa revenues, it is an exchange transaction. No? Okay. So, what are those current fund unrestricted? So, expenses are classified as program services and supporting services and reported on a functional basis under this classification. So, program services relate to the expenses incurred in providing the organization's social service activities. Okay? Pag support services naman, it consists of administrative expenses and fundraising costs. So, you notice the difference? Kapag program services relate to the expenses incurred in providing the organization's social service activities. Okay? What they are organized for, yun program services yun because they have different programs. Support services, yun yung sa administration. Okay? Administrative expenses and fundraising costs. In reporting expenses in the statement of activities, the functional classifications might appear as follows. So you have expenses, tapos meron ka program services, and then supporting services. Sa program services, it focuses on social services, research, public education, professional education, community services. Okay? While in supporting services, you could have management and general expenses and then the fundraising costs. Okay? So expenses are recorded on a full accrual basis in a manner similar to that used by business organizations. And expenses are recorded in each fund that incurs the expenses. So medyo ano lang siya, mabusisi, and it's the trick there is to really trace the items of the expenses, whether it relates to the program or to the support. Okay? And then, pagka sa program naman, you further classify to research, publication, public education, professional education, or community services. Okay. How about the current restricted funds? What do you know about it? It's also unrestricted net assets, and a temporarily restricted net assets. Okay, so current fund restricted. This fund is used for operations but only in accordance with the donor or grantor's specifications. So restricted pledges to be used. Okay, thank you, Rona. Gift and grants expendable only for purpose specified by donor or grantor. So yes, restricted pledges to be used to promote the adoption of handicapped children would be recorded in this classification. So, how about land building and equipment fund? So, parang plant fund lang din siya, no? Land buildings and equipment fund acquired by the organization, liabilities arising from the acquisition or improvement of plant assets, and then current assets restricted by donors or grantors for future disposition. And then we also have for VHWO, Endowment Fund. So for Endowment Fund, this fund is used to account for permanently restricted endowment principal to be maintained intact either in perpetuity or until a specific event occurs, and temporary restricted term endowments. Okay? How about custodian funds? What do you know about custodian funds? Do you guys know what custodian fund is? Okay, so custodian fund is a fund establishes to account for assets received by an organization to be held or disbursed only on instructions of the person or organization from whom they were received. This fund is similar to agency fund of a college or university, and the assets do not belong to the organization. Okay, so thank you for that, Hans. Alright, so let's go to the accounting principles. So voluntary health and welfare organizations adhere to the accrual basis of accounting as well, and revenues are generally recognized when earned and expenses are shown when the related services of the organization are provided. So sources and uses of funds are not merely classified as revenues and expenses, however, but are not instead broken down into categories. So we have donations of services, okay, which should be charged to the appropriate expense with an offsetting credit to support. And donated property should be recorded at fair market value on the date of the gift. Pledges should be recognized net of uncollectible amounts. And pledges or cash donations that will not be spendable until a future period should be shown as a deferred credit on the balance sheet. So voluntary health and welfare organization also must provide a statement of functional expenses. This statement reports expenses by both function, program and supporting, and by their natural classification, salary expenses, depreciation expenses, etc. Okay, so about other non-profit organizations. So for other non-profit organizations, a wide variety of other organizations have the option of using fund accounting. Okay, option. Examples are research and scientific organizations, social and country clubs, religious organizations, and museums. A great deal of flexibility is permitted in the accounting for these organizations. Okay, so may leniency tayo dito. Financial statements, okay, All not-for-profit organizations include VHWO to present three general-purpose financial statements. This includes statement of financial position, statement of activities, and statement of cash flows. In addition, voluntary health and welfare organization must present a statement of functional expenses. Okay. So, a statement of functional expenses, this statement breaks down each category of program and supporting expense by type of expense, such as salaries, supplies, and depreciation. It provides details omitted from the statement of support, revenue and expenses, and changes in fund balances, which only lists expenses by function. So, statement of financial position. The statement of financial position is presented for the entire entity. Its purpose is to provide relevant information about the organization's assets, liabilities, and net assets. So certain principles should be followed in preparing the statement of financial position. The focus is on the entity as a whole and should report total assets, liabilities, and net assets. So cash or other assets that have restrictions imposed by donor, limiting the use of those assets to long-term purposes should be segregated from the other assets that are unrestricted. And net assets should be segregated into three classes within the statement. Okay, again, same. It should be segregated to unrestricted, temporarily restricted, and then permanently restricted net assets. The nature and timing of donor restrictions must be disclosed. So, voluntary restrictions of unrestricted net assets by the entity's governing body resulting in board-designated funds may be disclosed. What are the types of restrictions that may be placed on assets? So it's the same with other colleges and universities. We have temporarily restricted, permanently restricted, temporarily restricted, and then unrestricted. So assets may be permanently restricted. On an example, maybe a donor-restricted gift such as artwork that must be used for a certain purpose and may not be sold. Another example might be a donor-restricted gift to be invested with the principal preserved and the income available for expenditure. Okay. So assets may be temporarily restricted. If an example may be a donor-restricted gift to be invested for a certain period during which only the income may be extended. After a certain period in time, the principal may be extended as well. Okay. Expended yan and extended. Another example might be a donor-restricted gift to be expended for certain purposes only such as a special program or project. The gift might be restricted to the building and equipment fund. Assets may be unrestricted, okay, and the examples include assets resulting from operations, unrestricted gift of cash or other assets, temporarily restricted assets, released due to satisfaction of the donor's provisions, and governing board designated funds. Okay. Then we also have the statement of activities for VHWO or other non-profit. We have the statement of activities presented for the entity as a whole. Its primary focus is to provide relevant information about the effects of transactions and other events and circumstances that change the amount and nature of net assets and the relationship of those transactions and other events, circumstances to each other, and how the organization's resources are used in providing various programs or services. So mostly because these are really they just have to like show to the users of these financial statements or information how the money was expended or how the funds are actually being used. So it's important for them to present to them by programs or services so that the organization can also assess where their focus is. Okay. And then we have the statement of cash flows. So basically for the cash flows, a not-for-profit organization presents a statement of cash flows in similar to that presented by a business enterprise. So they may either use the direct or indirect method of presenting cash flows from operating activities. The primary purpose of the statement of cash flows is to provide relevant information about cash receipts and cash payments of an organization during the period. Okay, so I have seen financial statements of these types of organizations which use the direct method. So they just use the total receipts from and then total disbursements to. Okay. Anyway, if you want to know the details, you have the functional expense, right? Statement. So statement of functional expenses. So that's about it for today. Do you have any questions? For next meeting, we will be having another pop quiz. So we'll have a recap and review, study in advance, and then yeah, that's it. Thank you very much. Unless you have any questions, that would be it, guys. Then I'll also ask you to turn on your camera so we can take a documentation. I'll start presenting. Can you turn on your camera, guys? Okay. Smile. Okay, again. Wait. Keep smiling. Okay. Ready, smile. Okay, so that's it. Thank you very much, guys, for coming to our class today.